Have you ever wondered what happens when a giant superannuation fund fails its members during their most vulnerable moments? Today, we're diving deep into a major story that has sent shockwaves through Australia's entire super industry. We're talking about Cbus, one of the country's largest super funds, and the massive penalty it just received for letting down thousands of its members. Let's set the scene. Imagine you or your family are relying on a death or disability insurance payout from your super fund. It's a time of incredible stress and grief. You need that money for mortgage payments, medical bills, or just to keep food on the table. Now, imagine waiting for months, or even years for that money to arrive. That was the devastating reality for over 7,000 Cbus members. The corporate regulator, the Australian Securities and Investments Commission, or ASIC, took Cbus to court. Why? Because the fund had major systemic delays in processing over 10,000 death and disability claims. We're not talking about a few isolated incidents. This was a widespread problem that went on for about 2 years. The federal court has now officially ordered Cbus to pay a staggering $23.5 million fine for breaching the law. On top of that, they've been ordered to pay $32 million in compensation directly to the 7,402 people who were left waiting. In court documents, Cbus's trustee, a company called United Super, admitted that its failures caused significant financial and emotional harm. Think about that for a second. People couldn't pay their rent or mortgages. They struggled to cover medical expenses and basic living costs. All this while dealing with the loss of a loved one or a life-altering disability. The court noted this caused emotional distress at a difficult time in their lives. That's a massive understatement for the suffering these delays would have caused. Justice David O'Callaghan, who presided over the case, made it clear that a fund of Cbus's size should have had much better systems in place. Cbus manages over $100 billion in members' funds. It's a giant in the industry, primarily serving workers in building and construction. The judge pointed out that Cbus had the ability to fix these problems, but simply didn't take adequate steps to do so. Even when they did try to rectify the delays, their efforts were not enough, and the problems continued for an unreasonably long time. Interestingly, the judge also noted that Cbus didn't intentionally cause these delays to make a profit. It seems to have been a case of severe mismanagement, and what the judge called repeated individual and collective human errors. Cbus's own chairman, the former Labour Treasurer Wayne Swan, had previously been brought before a Senate committee where he apologized for the fund's far from perfect behavior. So, where does the money for this massive fine come from? This is a key point. Justice O'Callaghan acknowledged that the penalty will ultimately be paid from the fund's trustee, Risk Reserve. This reserve is funded by fees charged to members, so in a way, the members themselves are footing the bill for the fund's failures, as future fees might need to be adjusted to replenish that reserve. It's a bitter pill to swallow for the fund's broader membership. In response to the ruling, Cbus has issued another public apology. They said, "We want to again apologize to our members, families and claimants without reservation and promise to do better." They've confirmed that they've already paid compensation to almost all the affected people and are working to resolve the remaining cases by the end of next year. Cbus also mentioned that they settled a dispute with their customer service administrator, a company called MUFG Retirement Solutions. This resulted in an apology from MUFG and a financial settlement paid back to the fund. So, it seems part of the problem lay with a third-party administrator. What changes are being made to stop this from happening again? Cbus says it has doubled the size of its internal claims team and created specialist units to handle claims more efficiently and empathetically. They've also announced major reforms to their insurance process, which they claim will cut the average processing time for a death claim by 4 to 6 weeks. The goal, they say, is a simpler, more compassionate experience for families. This case is a huge wake-up call for the entire superannuation industry. ASIC has been on a mission to improve customer service standards across the board, especially when it comes to handling death benefit claims. They've made it clear they will continue to monitor the industry closely. For everyday Australians, this story highlights just how important it is to have a super fund you can trust, not just to grow your retirement savings, but to be there for you and your family when you need it most. Have you had any experiences, good or bad, with your own super fund's insurance claims process? Let me know in the comments below. I'm really interested to hear what you think. And if you found this breakdown helpful, please give this video a like and subscribe for more deep dives into the stories that affect your finances. Thanks for watching, and I'll see you in the next one.